Hey everyone, and welcome to Earnings Cheat Sheet for Friday, November 21st. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. Now, Ed, it is a little bit of a lighter week with the Thanksgiving holiday, but we're going to give a little amuse-bouche, I guess, with the earnings here. So, what do you have on tap for us today?
Yeah, it's only 3.5 days of trading. So I don't know. I guess we'll just do two-thirds of our normal big earnings. I will take a look at Alibaba and cybersecurity play Zscaler.
All right. Well, I like the math that's mathing there, Ed. But yes, let's start with Alibaba, which is scheduled to announce fiscal Q2 earnings on Tuesday, November 25th. Earnings for the Chinese e commerce company are projected to fall 59% to 85 cents per share, and revenue is seen rising 5% to $34.27 billion. And here's why we're watching Alibaba. We'll be looking at cloud and AI revenue growth. We'll also be looking at any AI spending and AI chip updates. And we'll also want to know if Alibaba is still pushing hard in food delivery, which has hurt margins. So, Ed, Alibaba rallied in September after announcing a partnership with NVIDIA and plans to spend more money to develop their AI infrastructure. Shares hit their highest point since October 2021, but it's been a little bit of a bumpy ride since. But what's on your radar with Baba stock?
Yeah, I mean, it is a lot of that cloud growth has really been driving it. A little bit like how Amazon has become, people care more about the cloud because that's the profitable part, or certainly at the margin. They are being squeezed as they, like the fast delivery kind of stuff. So the e-commerce business is still the bulk of the business, but that cloud stuff, that AI things, like, are they seeing that? And it's also the market reaction to all that. I mean, is the market going to be happy with their AI spending? Is the market going to be happy with the growth that they're seeing? Because, back a couple months ago, you say anything AI and the stock rallies. Now it's like market's a little bit more judgmental on things like that. So want to see how that goes, and when that really moves the needle on earnings going forward.
All right, well, let's take a look at the chart, Ed, because Baba stock broke below the 50-day line a couple weeks ago and really almost round tripping this 148.43 buy point out of consolidation here. Uh, that breakout back in September. But talk to me about Baba stock. What are you seeing here, and what should investors be looking for ahead of earnings?
I mean, this is one of those situations where people say, "Hey, maybe this is a double bottom," and maybe if it starts building the right side of its base, it could be there. But the problem with this, sometimes a stock will rise, it sort of tries to come back, and it fails, and then it falls off. I mean, this could just drop off and be a double bottom where the person falls asleep before finishing up before finishing the W. So it needs to get back above the 50-day line. If it decisively gets above the 50-day line, there might be a downward sloping trend line, 192.67, and do it from there. Then I think that there'd be a spot probably not too far from the 50-day line, especially when you think a week off. That lines up pretty well. So a decisive break of the 50-day line might provide an entry, but it needs to do that. I mean, it needs to do that. It's like, because right now all we see is a downtrend. I mean, part of what makes the double bottom so exciting is that everybody is scared. It's like, we keep falling, we're falling. And so when it rises, everybody gets excited again. And so it can be really powerful. But there's a reason why it's powerful, because often it doesn't develop.
So ideally, shares could find support at this previous buy point here around the 150 level.
Yeah, and you can see it on a weekly. I mean, this base that is could be forming here, if it forms, it's not nearly as deep as the prior one. So again, while it's not tight, this latest action, but it comes after sort of there's some up and downs, 36%. It was hard to You would have had to buy the best time to buy BABA was right before the last, or right around the last earnings report, where it sort of gapped up, because you can see it was but that was sort of low in the base when it first came, or it was already breaking out. It may have already broken out, which made it even tougher. Uh, so sometimes it's like if you can find a shorter base afterward, that would be a spot. But the earnings are going to fall. I think their earnings are set to fall this time, and we'll have to see. And part of it's those investments. So you have to see, are you going to be so excited about it going forward? The accumulation distribution rating is pretty good. You see a lot more volume spikes on the way up. I will say, even though there's been some violent sell-offs, the selling hasn't been that heavy. I mean, the first week was sort of heavy, but it wasn't crazy heavy. and then the last week was down. But again, it's earnings. You still have the China risk. You have AI risk in general. So if AI trade turns positive again and Alibaba has strong earnings, this one may do well.
Anything else with the fundamental picture standing out to you?
Yeah, I mean, it needs to see that turnaround, and we're seeing slight increase in revenue the last quarter, and it's supposed to pick up again, and then pick up again. Again, the cloud revenue and AI revenue still trying to become a bigger part of that piece. And so while that stuff is growing fast, e-commerce has been sort of sluggish, and then you'll see the profit supposedly turning around. But right now, it's not there. I think we want to see some sign that investors feel confident that that will turn around and will develop strong earnings next year.
All right, well, let's move on and take a look at Zscaler, which will report fiscal Q1 earnings on Tuesday, November 25th. Earnings for the cybersecurity play are expected to climb 12% to 86 cents per share, and revenue is projected to rise 23% to $634.4 million. And here's why we're watching Zscaler. Agentic AI has become a key part of Zscaler's growth outlook. So we'll want to know, how did that perform in the latest quarter? And what's the outlook there? And Ed, Zscaler's last strong earnings report was really a tailwind for the stock, but the broader market rotation out of some of these high flying tech names has really pressured shares here recently. But what are you watching with Zscaler?
Yeah, I mean, it has a few drivers, and AI, of course, is one of the most exciting ones. It's a little different because I mean, it's actually growing with AI. This is one of the companies that's opposed to all the companies that are delivering AI to turn off. They're actually using AI as opposed to all the other folks delivering AI to you. So that's interesting to see how that can go. Can it develop that growth? But cybersecurity is sort of out of favor right now. I mean, it looked like it was back in favor a few weeks ago. There was a few software names, but right now with the market down, that's not. So I want to see that growth. Are they? There's the cybersecurity leaders come in and out of favor. I mean, there are certain ones that lead, and Zscaler looked like it was one of those. The stock isn't so much now, but it's delivering solid growth. Can it deliver that? And it is still pretty richly valued, so it needs to have strong growth to really push that higher.
And let's take a look at the technical action, Ed, because this one broke below the 50-day line last week. It also undercut this round a 300 number here, kind of an important psychological level. But really, tried to break out. It rolled over, then moved higher, but seems like it's been pulling back since hitting this 336 high here.
Yeah, and the guess what? I mean, it's even though it's not connected necessarily to some of these high flying A plays in the same way, they're still seeing these names fall off. And it looked like it might bounce back a little bit, but yeah, breaking through the 50-day line looks pretty ugly. I'll be honest. It does not. When we were looking at we were thinking, oh, what can we look at this week? Earlier on, it's like, well, with a good day or two, all of a sudden this is above the 50-day line. But now it's given up a lot of its gains. I mean, it's basically round tripped all the gains since the last time it got above the 50-day line way back following the earnings report. Like, when it started moving up there, if you bought it when it got above the 50-day line, you've round tripped a pretty substantial gain. That looks like maybe, 15, 20%. Anybody who bought the actual breakout, obviously suffered a big loss. Today, this week we had Palo Alto that had disappointing earnings reaction. The earnings weren't bad, but the earnings reaction wasn't good. Zscaler shrugged that off in part because everybody else was happy, happy, joy, joy to initially, but then NVIDIA. So, Palo Alto is not the leader, but still it's a giant one. That was just not a good sign. You saw a lot of cybersecurity plays come off. This needs to repair. I mean, I think at this point it needs to set up again. Yes, it could run right back about the 50 line, and it happens. I mean, it could gap up 20% on earnings, and everybody goes, "Oh, you should have bought," or "Here we are," but it doesn't look right. It doesn't look right. So I think it needs to maybe form a new base. Whether it either comes up to the 50-day line after a few weeks or gets above the 50-day line and bases. But I would like to see something, at least something approaching a base, before getting too excited.
And what in terms about the fundamentals that are sticking out to you? Because again, pretty solid growth here, although that is decelerating a little bit, but really solid sales figures here for Zscaler. So anything else jumping out to you?
Yeah, I mean, it's a solid growth performance, steady revenue growth. I mean, a lot of software makers do that. That's one reason why software makers often have a pretty nice or relatively high valuation because you can sort of trust it. It's like, well, it's like, the software programs you're using at work, you keep using them. I mean, you don't change it. And so, with everything being on subscription basis, I think that helps. Are they spending about? I guess, are they spending more? Are they having to do things to keep that going? Maybe that's why the earnings growth will slow a little bit. But yeah, it's a solid performer. It's not that tremendous growth that we saw a couple of years ago, and just have to recognize that.
All right. Well, those were the big names on our radar, but there's a few more in our cornucopia, I guess you can say, Ed, to take a look at. So let's just start with Dell Technologies. That's scheduled to report on November 25th. And again, this one here, pulling back a very sharp drop after hitting this 168.08 high, uh, looking for support at this 200-day line.
Yeah, a couple of things that have been happening here is that one, okay, the AI trade, there's concerns about that, but Dell is also it's also does PCs. And PC companies are getting hit because memory prices are skyrocketing because AI needs it. And you have this little bitty PC for $400. How much? I mean, you can't say I'm going to spend $180 for memory. It's like that gets, you have to, it's just squeezing those margins, kind of thing there, because there's only so much you're going to raise the PC prices. So it's sort of a double whammy. Everything seemed to be working there. Revenue growth was finally picking up. That was a thing. Here we go. But now I think there's just real concerns that there's a bit of a squeeze and out of favor. So, uh, yeah, it needs to repair. It probably needs to set up again.
All right. How about Nutanix? Another cloud name here. Not looking so hot, Ed, way below the 250-day line.
It is interesting because there's a lot of storage type things or memory plays that have been doing well, but this one has fallen apart for a while. I mean, but it'll be an indicator for some other ones that are doing a little better, like Pure Storage, PSTG, which is in a different group. This is enterprise, but it's sort of a rival. Pure Storage also struggling. That's actually, I don't think it's next week. I think it's the following week. Uh, but that, so how Nutanix does is still going to be relevant for some better performing stocks.
All right. How about a Dollar Tree earnings there on November 25th? This one in a cup with handle base with a 107.48 buy point. But I'm assuming here, Ed, this will be important to kind of get a check in on the state of the consumer.
Yeah, I mean, I don't like this as much as TJX and Walmart, which reported this week, and they were already doing better. I mean, TJX was already in a buy zone, sort of, before then. Walmart had been hanging on a little bit better, and today gap up, but it was sort of near highs. Whereas Dollar Tree, it gapped lower on its last earnings report, and it's sort of come back to that. And so a breakout would be meaningful here because it'd be sort of filling the gap from the prior one if it actually got up there. But the relative strength line is lagging. And so I'd have to be convinced, not just is this the best stock, is this even the best stock in its vague group kind of thing? It's like, I don't know. But yeah, it's important for consumers and seeing how they're handling the combination of higher goods prices and inflation on that front with people coming down. So it's an interesting combo.
And let's just keep going with retailers with Dick's Sporting Goods. This one also scheduled to report on November 25th. And again, in a flat base, but has been trailing off lately and below the 200-day line.
Yeah, so this whole range that we've had the last couple months could be seen as a bottoming base. I know there's this other stuff, but from the bottom, from its uptrend from May or April or whatever. So it's had that prior uptrend, but it's fading off, and RS line is weak, and it just seems like consumer stuff is weak. It just is. I mean, it could turn around, but it just doesn't seem like this is a good time for Dick's Sporting Goods.
And what about Burlington? That also due on November 25th in a cup with handle base with a 293.31 buy point.
Yeah, this one hasn't performed as well as TJX, as its rival, or even so. I mean, but so we'll see how that goes. But I mean, it's in a good space, but it doesn't seem to be a leader in that space.
All right. And let's just wrap up with Urban Outfitters, also due on November 25th. And again, Ed, we're heading into Black Friday territory, but retail not looking good.
No, no, and David Ryan, our special guest every Tuesday on IBD Live, talked about how he had shorted this, and I don't know if he's still shorting it, but because I don't think he would say it's a good place for a short now. But yeah, this one really sold off on earnings, and you can see how it sort of came up weakly to the 50-day line after that, and then sold off, and then tried to hold the 200-day line or fight to back above it, but it's fading off. I mean, fashion is fickle, and this was doing much better than a lot of other names, and now it is lagging. This is not the consumer space, consumer discretionary does not seem like a strong space generally, and obviously this stock looks weak.
All right, Ed. Well, thank you so much for your insights today. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune into Stock Market Today. That goes live after the closing bell. Thanks so much for watching, and we'll see you all next week.